Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. In yesterday's video, I talked about the crypto that I'm most excited for going into this next cycle, and many people have been asking me, I have money on the sideline, what do I do with it? When is going to be a good time to get into the market? And so for today's video, I figured the best thing I could do for you guys would be to break down where I think that the market could be headed as we get closer towards the end of the year. We've had a nice rally in price over the last month and a half. Is this now a good time to be getting in, or should you be waiting for a little bit of a short-term correction? I'm going to break down exactly where I believe the markets are going to be headed so that you guys can time your entries in the most profitable way possible for your portfolio. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. And make sure you guys sign up and join the Discord server, or go ahead and download my free ebook. Links are going to be provided for you in the description for both. Thank you guys so much for tuning in. And with that being said, let's jump right into this amazing video today. Alrighty guys, so for today's video, we're going to cover the shorter time frames of crypto. I'm going to be updating you guys with Ethereum. We're going to be taking a look at the stock market, and then we're also going to be taking a look at the US dollar index. All of these are going to tell us where the potential of the short-term move is going to be headed, whether that's going to be up, whether that's going to be down. And so I figured that the best thing that we could talk about today is actually taking a look at our 200-week moving average. And this is a really important level that I expect is going to be a pretty important consolidation level. It's very possible that the price can go back below this like it did already once before. But I do expect that this 200-week moving average is going to provide a very important level for the price action to pretty much consolidate around or off of. Now, if we're going all the way back into our last bear market, this was where we ended up bottoming in our bear market low. We ended up consolidating here for about 3 months before making our first higher high in the cycle. Now, I'm not saying that we're going to just have to follow this exact same formula, but what we can see here is the 200-week moving average is a very important trend tool that many different analysts and institutions are actually watching. So when it comes time to understand when the opportunity to be buying or selling is, the institutions are looking to buy the 200-week moving average, and then once we start to distance ourselves from even the 50-week moving average, they're taking profits. They're taking profits even before that, because here's the thing, guys. If you are getting in at this 200-week moving average, you're getting in at all of our major low points of the cycle. And so it didn't really matter what exact price you got in. If you would have just had the trading plan to buy the 200-week moving average, you would have got filled in here at a very important level that would have just been a good long-term level to be looking to buy and hold. Now, I expect that this level is going to play out in a similar way, even though we could spend a longer period of time off of this 200-week moving average. And we could get more volatility than that. Maybe we end up peaking below this, retesting these lows all the way back down here at about 17,000 and a half, and then popping back above like this. Anything is really possible at this point inside of our consolidation. And I think that the big thing to understand here is it's going to be exactly 365 days from the very high of 69,000 once we get over here to about mid-November. The first week of November is once we're exactly a year from our exact all-time high of that cycle. And so if we did get some type of consolidation around here, it wouldn't surprise me, because that would be taking us also exactly 1 year from our all-time high, which would be following the 4-year cycle time frames. Because keep in mind, guys, where did we actually end up topping here at 69,000? Even though we saw actual euphoria, our true euphoria cycle top was here. This is where all of the altcoins went the craziest. That was DeFi summer. That was some of the NFTs that started to really go crazy. And that was where we saw peak euphoria. We also saw the meme coins in there between Dogecoin, Shiba Inu, SafeMoon, some of those other major cryptos that had massive hype cycles. All of the major hype was driven inside of this move here. And so that's why I've always pointed out that I believe this entire move back down, back up into a new all-time high at 69,000, and then all the way down to 17.5 is just one larger ABC correction. I don't believe that anything has really changed aside from the fact that this is just a bigger type of correction. This all-time high move wasn't an impulse, it was a corrective wave. And so all that really changed here was just the fact that the consolidation is going to take us longer, and I believe that the move that's coming to get that same type of a blow-off top that we were all waiting for back over in this period, as we were watching this move going into new all-time highs, as we were waiting for that big blow-off top that never came, I honestly believe that the reason we never saw that was just because of how much money is actually in the market today versus how much money used to be in the market back in prior 2018 bull markets. Because if we're comparing our first move down in here, the length of consolidation that we had from the very high until the point of breakout was about 500 days, just under 500 days that it took. And then that led us to basically a 550% move inside of Bitcoin, which is a very, very large move in Bitcoin. Altcoins, it would have been even much bigger than that. And so it took about 500 days to get about a 5.5x inside of Bitcoin. And so while we were all waiting for this massive blow-off top that was going to take us to 250,000, think about the length of time that we got inside of this consolidation. We really only saw about 63 days worth of consolidation, and if you even draw over here to the all-time high, it's still less than 100 days. And so the move that we saw to the upside, it wasn't impulsive because none of this move really was that impulsive. We didn't get the same length of consolidation, and even though we were following the same time frames, I believe that we're at a different stage of the market cycle where it takes way more money and more time to move the markets in the same way. And so we're seeing this lengthier type of consolidation. We still followed the 4-year cycle timeframes. We still ended up getting this new all-time high peak right there at the first week of November, which was our winter timeframes that we're watching. And so with us coming right here close to that 1 year from our all-time high, I wouldn't be surprised if we get a lot of sideways consolidation, and maybe we do make one more deep correction that takes us back down to our range lows in here before this is ultimately over. It's kind of hard to say exactly what will happen, but these are the big things that we need to watch out for. At this point, from our euphoria that we saw here in about April of 2021, from our bottom, that was about 430 days. From where we're at today is about 490 days. So if we're looking in terms of lengthy consolidations that can lead to a big expansion to the upside, so far we've already met what we're looking for inside of our next impulse. We've already consolidated well over almost 500 days. And so now that we're getting to this point, I believe that the cycle low is shaking up, not only with our pi cycle low indicators that we're watching. We already got our pi cycle low that flashed here, which the pi cycle low is literally flashing because we hit the 200-week moving average. That is kind of why we see this indicator end up going off. And if I had the all-time chart, it would actually flash over here as well. But anytime we've hit this 200-week moving average, we get a pi cycle low indicator that flashes. And so every time we've hit this, we've got our major cycle low. And so now that we've had our pi cycle low indication already flashed, I don't think that that's guaranteed that we won't end up coming back down and retesting this level again. I just think that it ultimately shows us that, hey, we've hit the 200-week moving average again. The 200-week moving average is a major level that institutions look to buy. That's why we're getting our pi cycle low indication. Now, we're going to have to ultimately see what happens off of this level, but I expect that this is going to be our main level of consolidation as we ultimately assert ourselves into that next trend. And so when we're watching our time frames, understand that, we still have a few months until we get to our projected 4-year cycle low. And so with that 4-year cycle low, we could get one more attempt at these range lows. And so if you're looking to buy any sort of dip, if you're looking to get into the market, I think the best thing to understand here is just to look at the big picture and know where you're getting in on a macro term. So when you're looking at the long-term trend of Bitcoin, you obviously want to be getting in at where we view as the most least risk and highest reward level, which if we're looking at this, that's obviously the 200-week moving average. Now, this can go below the 200-week. We saw that we actually capitulated quite a bit below this level. We saw the same thing happen here during the COVID capitulation. We know that we can trend below this level, but we know that as a trend tool, we see the Bitcoin trend generally consolidating above this. And so with that known, there is always the opportunity that we could make one more attempt at these range lows. Maybe we capitulate one more time below this 200-week moving average. And so simply prepare for both scenarios. If you haven't bought at all, you haven't looked to accumulate at all during this entire sell-off, I don't think you can go wrong buying at any point of us being at this 200-week moving average. I think that if you're watching for the best sound strategy that you can go about, just simply keep cash on the sidelines. And if we do get another type of capitulation where we run back down at the range lows of 17,500, then you have money on the sidelines and you can buy. You don't have to complicate these things when it's not meant to be super complicated. All we can do is look at prior trends and understand when the right time to get in or get out of that trend is. And we know that based off of this trend, the 200-week moving average is an important level that we should be looking to buy, not sell. I'm expecting that this is going to be playing out in a similar way. And so it just makes more sense that as we're looking at this chart on a macro view, we know that we've only finished wave 1. We know that we've only finished wave 3. This is the bottom of wave 4 whenever it ends. And we know that we still have one more wave 5 to go inside of this next move. That's why I believe that we've had such a lengthy period of consolidation in here that's resembling very similarly to our first move that we saw right here, that first impulse that we saw. And I believe that it's because we're still missing one more final impulse before all of this is done. And so what we're seeing is impulse, correction, impulse, correction, impulse. And then after that, honestly, I wouldn't be surprised if we see another lengthy multi-year bear market, very similar to what we saw over here, or even throughout this period over here. Because if we're thinking in terms of a 4-year cycle, the length from the all-time high to the point of breaking that, it was like 1,100 days. And so I'm not looking at this as the same as this multi-year type of cycle. I still believe that we're in the same bull run that hasn't finished. We're still missing our blow-off top in here. And so nothing has really changed for the most part, even though we topped and followed the 4-year cycle, and we're most likely going to get a major cycle low that flashes at that same end of the year threshold. I believe that the next cycle that's coming will lead to a multi-year bear market that will have like this. It might only be 1 year down like we saw in this move. So let's just go over here and let's just draw this real quick so it's easier for you guys to see. Let's say we get this big move upwards of 300K, and then that starts, a big multi-year decline of some kind. Maybe come all the way back down here like this. I don't know what it'll look like, but let's just assume something along the lines of this. So let's say that we get this peak. We would expect about a year worth of a bear market. So we'd go for a year, and then that's where we'd start this new bull trend, right? And it would take a long period of time as we built until we finally went up into a new blow-off top. See, I don't believe that our current consolidation that we're in is that. I don't believe that we're going to consolidate sideways for another 2 years and then go for a 1-year blow-off top. I don't believe that that's what the price action is showing us. What it tells me is the next move that's coming is going to be shorter than our typical bull runs were. It's not going to take, this 1-year decline, this 2 years of sideways uptrending, and then a move to the upside. I expect that it's going to end up playing out us getting into that 2023 level, and then that's most likely when the market starts to go back up again. And then the move that comes after that next cycle, that next major bull trend, I expect that that one's going to ultimately lead to another 3-4 year of consolidation as we ultimately have to work our way into our next cycle. Now, some other things I want to talk to you guys about on this video today is talking about Ethereum. Now, when we're looking on the shorter time frames for crypto, a lot of these cryptos have already bounced all the way back up, and they've pretty much tagged a lot of these resistance levels that I was watching for. And so the upside gain is a lot less with the risk. I mean, you're not looking at not nearly as high of a gain compared to what you're looking at the risk. We've tagged this resistance. We've tagged this resistance here. We even came close to tagging the bottom over here. And so most likely this is needing to cool off a bit, and we're going to come back down to at least this red level back at about 17,000. Now, from here, I think that this is going to be a really important level to watch. And I'm going to be looking at this as more of a zone. I'm going to look at it kind of like this. So we can temporarily go below this. Even though this was our support here and support here, we can temporarily go below and kind of consolidate in between this range. But I don't want to see us actually go below this. If this starts to look like resistance, we get wicks off of these moves, and it just shows that this prior support, our first red resistance at 17,000 is proving to be resistance, then you would be looking for short opportunities, because this would most likely drop all the way back down to the range lows. Now, these are just the way that we can play the market level for level when it comes to watching it. We know that we had a big move off of the lows. Most likely this needs to cool off. We're looking at more of a range than I would say as you can draw one specific line and say it's got to hold above this, otherwise it's going to go to the range lows. Because I don't think that. I think that we can consolidate back above this level in between about 15,000 and 17,000. You know, if we start to show resistance off 17,000 and we can't get back above, then I'm expecting a deeper correction all the way back down to the range lows, and you'd be better off shorting and looking for short opportunities. But that's kind of just what I see in the short term. Overall, the market doesn't look that great. The OBV really hasn't moved off of the lows. The RSI didn't really break out off of our recent move up. So overall, the trend in the short term looks exhausted. That's what tells me that we need to come back at least to 17,000, most likely coming back down to about 1,500, I should say, 1,500. So that's what I'm going to be watching out for with Ethereum. But overall, guys, a lot of it's really hingent upon what is the SPX going to be doing. And when I'm looking at the SPX, there's a few good things that we can look at, and then there's some things where we can draw the conclusion that if we do get a deeper correction, kind of like what we saw here or here, what is that going to look like for crypto? Well, let's kind of talk about it. When it comes to watching our indicators, overall the SPX has made a nice rise off of the lows. So far, everything that we wanted to see is played out. We broke out of our resistance levels. Very little hesitation, really. There wasn't much resistance in those levels. And then we rallied all the way back up to over 4,300. When we're watching this chart and we're seeing crypto starting to look a little bit exhausted, everything's hinged upon what the SPX does. If the SPX decides to take another leg up to 4,500, crypto's going to take another leg up as well. Crypto might look exhausted in the short term. If the SPX makes another leg up, crypto's probably not going to look too exhausted in the short term again. But when we're looking at these charts, this has been a pretty significant move to the upside. We haven't seen any sort of sell-off. So I would expect to see us actually end up retesting this 4,100 to about 41.5 level. That's kind of what I'm going to be looking for personally. And if as long as we can hold above this level, I think that that is really what sets us in for a nice bottom across the board. If the SPX bottoms and we start making a nice move back up and closer towards those new all-time highs, then I think that crypto is ultimately going to be cementing itself a bottom as well. But I mean, overall, we don't have true confirmation yet. We did manage to get outside of our resistance on our OBV, and it does look like we could be retesting it, but you know, with us pulling back, if we get a deeper move to the downside, then this is just going to end up closing back below like this. And so that would put us back down inside of this trend on the OBV. That entire move would be more of a fake out. And from that point, you know, that could start to look a little bit hairy. We don't know exactly. The OBV hasn't given us any sure signs yet. And so if we ended up getting a deeper type of correction and this ended up just being another dead cat like the prior two that we've seen, then honestly what we'd be looking for is a deeper move to close out the end of 2023 at most likely about 3,200. That's where I would be expecting us to go. It would be a pretty deep correction back to the downside. And if that happened, most likely you're looking at $10,000 for Bitcoin. And with ETH, you know, you'd be looking at even lower than that, probably all the way down here at $340. I don't think that that's the likely scenario by any means. You know, I think that a lot of that would bring volatility inside the economy. That would probably be some type of black swan event. You know, if China invaded Taiwan, maybe that could be enough to do something like that. But overall, I'm not necessarily expecting another deep move to take us down to the end of the year. If that happened, you know, overall, we would expect that Bitcoin would have a deep correction like this. And, you know, overall, this 200-week moving average really wouldn't provide much of any type of support. And it kind of would invalidate a lot of these indicators. Overall, I'm not expecting it. we have had such a nice move off of the lows that as long as we can kind of hold support in here, really our lowest point that I want to see us go to, I don't want to see us go any lower than about 4,100. You know, probably about just under 4,100. That's kind of the level that I'm going to personally be watching for. I don't want us to go below that because at that point, that's where we would start to look at the potential is where crypto could go a little bit lower than expecting. Now, one of the big things that we're watching here on the shorter time frames is actually going to be the DXY. The dollar index has made a nice bounce off of this 50-week moving average, off of the 50-day moving average. We have this upper resistance here at about the 107 level, but overall it's looking pretty strong. The dollar's looking strong. With the dollar looking pretty strong, bouncing off this 50-day moving average, and the SPX bouncing up into resistance, most likely I expect that this is where we're going to see that pullback. Inside of the SPX, you're looking at about a 4 to 5% drop. So with the DXY, you know, 4 to 5% drop, that could easily take us upwards of about 111 to 112, about a 5% move to the upside here. And so that's what we're going to be watching in the short term. What we're watching for next is us to either show resistance at this little box or whether we're going to flip it. If we flip this, I think it's a go ahead to about 111. That's most likely where the next target is going to be headed for us. And, you know, overall the SPX would get a deeper type of correction, probably about 5%. If that's the case, overall, most likely this is probably going to retest the range low. Bitcoin's most likely going to retest the range low, and we'll get another deeper type of correction. But nonetheless, guys, I don't think that this should be something to worry about. I think that that should be looked at as an opportunity to get in. The whole point of this video was to map out where I think the market can be headed over the next few months. And in the short term, the dollar looks pretty solid. The SPX has made a really nice move off of the lows. Now we're at resistance. It looks like it needs to cool off a bit. Bitcoin really didn't make a big move to the upside, and so most likely we're going to have to end up retesting the range lows or close to. With Ethereum, that's probably what's going to end up playing out again, especially if Bitcoin does it. Then that's just the way that the cycle is going to end up looking. Now, that would put us at somewhere around November being our low of this. And so if that happened, that would be following a 4-year cycle time frame. It would cement somewhat of a double bottom type formation. And I think that that could be a big thing to watch for if you're somebody looking to get in at a better time. Right now, I don't think is the absolute best time to be buying. Like I stated, SPX is at resistance. The dollar's bouncing and looking good. I think you're better off waiting for this next dip to resolve. But that will be a good one to ultimately get into the market. So anyways, this is the video I had for you. If you found value in this, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these amazing videos. If you guys want to join the Discord server, download my free ebook. Links are in the description for that. For the people that also like to sign up for my video course Signals, follow all the trades that I take, all of the expert picks and VIP stuff that I post, all of that's linked in the description to go ahead and sign up on my website. Thank you guys so much for the support. And with that being said, I will catch you in the next one. As always, peace out.